Good morning, everyone. Welcome to Phillip Securities Research Weekly Market Outlook. I'm Raven. I'll start off with the market outlook, followed by equities update by Derek, and then subsequently Joshua will cover featured company, which is posted. In terms of the market outlook, the key event last week was the US January FOMC minutes, which hinted of a premature withdrawal of large-scale asset purchases, even before a substantial improvement in the labor market. What this means is that, in plain English, the Fed could actually scale back or even totally withdraw its current monthly purchases of 85 billion of mortgage-backed securities even before unemployment hits its threshold of 6.5%. But nonetheless, we reckon that even in the event of a premature withdrawal of large-scale asset purchases, corporate earnings could still be supported by a global cyclical upturn. The next major event over the weekend was UK losing its AAA credit rating. So what happened actually was Moody's downgraded UK sovereign rating to AA1 with a negative outlook half an hour before US markets closed on Friday. So immediately in the currency market, we see the pound dropping to as much as 75 pips. We look the pound or the GBP USD currency pair is likely to test supports of 1.50 and 1.45 today. But on a broader scheme of things, we think that UK losing its AAA credit rating is actually not too surprising. As we've guided in our macro strategy reports last year, we reckon that traditional safe havens such as your treasuries and your UK gilts, they have actually dubious credit quality, right, in terms of the fiscal health of these economies. What this means for Singapore is that Singapore right now is one of the few sovereigns that have a AAA rating as well as a stable outlook. A stable outlook means that there's no risk of downgrade in the near term. So what this means is that for Singapore bond markets, we could see more of safe haven flows, and international investors will also be attracted to Singapore bonds as they could also gain from currency translation owing to a strong Singapore dollar. The immediate macro risk events ahead are the Italian elections. The outcome is still not out yet at this juncture, as well as the first March sequestration in the US. And right now there's political gridlock in the Congress with regard to this matter. So in short, markets could actually be jittery this week, but we reckon that pullback in prices could actually serve as an attractive opportunity to accumulate our overweights on China, Hong Kong on compelling valuations, Philippines, Thailand on resilient domestic demand, and Singapore on attractive dividend yield of around 3.3%. In the US, the S&P 500 snapped its 7-week winning streak. It's still hovering at cyclical high though, but we think that it's an uphill task to actually take out the 1575 level because of the macro risk events ahead, the sequester as well as the 18 May debt ceiling. In Japan, in our morning notes, we have written that we are cautiously optimistic about Japan. Even it has rallied quite a fair bit since late last year, surpassing its 2011 pre-tsunami levels. There's still scope for it to challenge the pre-crisis level about 14,000. Right? So essentially, the yen has actually weakened quite a fair bit, right? And that bodes well for the Nikkei. But we reckon that valuations suggest there's actually limited upside to earnings for Japan corporations. But notwithstanding a weaker yen, we reckon that aggressive monetary easing is simply not the solution to Japan's structural problems. So essentially Japan is confronted with a couple of headwinds, the first of which is a prolonged period of deflation, a decade long, unfavorable demographics, aging population, and thirdly, most of Japan's domestic industries are actually protected And we need actually micro reforms along with aggressive monetary easing to actually take Japan out of the deflationary cycle. For investors, they might want to be mindful that total returns, when translated to your US dollar or Singapore dollar, could be actually eroded to a large extent by a much weaker yen. The question is, how much weaker can the yen go? We look to the change of guard of the Bank of Japan governor, as well as the 4th April maiden monetary policy meeting. We've written about this in our morning commentaries, and I will not elaborate too much here because of time constraints. Now, as early as during our 20th February morning commentary, we have been telling investors to keep a lookout for a breakout in the Nikkei. So indeed, the Nikkei has actually get up today, this morning. Reason being that over the weekend, or rather early this morning, about 6 a.m. Singapore time, Kurada, which is the current Asian Development Bank head, has been tipped as a nominee for the Bank of Japan governor. So Kurada there are actually 3 candidates running for the Bank of Japan governor: Iwata, which is the most dovish, followed by Kuroda, and finally Muto. So Kurada is actually seen as a middle ground, and hence markets actually took cue. Your USD JPY actually broke out of the consolidation range. It went up higher this morning, and similarly your Nikkei also gapped up. For the China A-shares market, it's actually slipped below 2,600, because what actually happened is that over the weekend we saw home prices actually rising, and that could actually prompt a firm policy response from the Chinese government on further property tightening measures. Although it's recovered a bit when markets opened this morning, but we reckon that it still needs to clear the 2,800 resistance to actually surge higher. HSCI near-term weakness is likely to persist. It slipped below its 50-day moving average and is hugging the lower Bollinger Band, so downward bias is likely for the HSCI. In Hong Kong, also over the weekend, there are new property cooling measures with regard to loan-to-value ratios, as well as an extension of cooling measures across all property types, right? So HSI actually broke below the 50-day moving average again. Strong support at 22,000 and resistance at 23,000 to 25,000 region. STI is likely to tread along its 10-day moving average going forth, right? As we have guided in our morning commentaries, the movements of the STI in the previous 2 sessions was similar to what we have guided, so we would like to encourage our investors to actually read our morning commentary before markets open. For the STI, it faces psychological resistance at the 3,400 level, support at 3,250. For the KLCI, it's been testing the 200-day moving average. We would not expect further clarity until the 13th general elections is over. For Thailand, it's also in a consolidation zone. We are waiting for a breakout. Indonesia has ran up quite a fair bit. In terms of total returns, the MICI Indonesia has actually garnered more than 7% year to date. But although Indonesia looks promising, we are actually cautious due to a weak rupiah, as well as political posturing ahead of 2014 presidential elections, which might cause some uncertainty and consequently jitteriness in the markets. With that in mind, I'll pass on to Derek to cover the research updates for the week.
Hi, good morning everybody. These are some research updates for the week. Last week we actually wrote a non-rated note on chip ink zinc. We find that the increase in public housing construction will likely support this construction business. Some of quite a substantial bit of their residential projects, they are under development or fully or substantially sold. our analysts expect that this would increase the NAV of the company by around 51 cents per share. The higher selling price achieved at Alexandra Central is also likely to add in another 33 cents. So excluding dividend payouts, NAV is likely to grow to around 149 by the end of 2015. So as compared to the current market price, it's quite a substantial discount. Genting Singapore, the key takeaway for this set of results is that the VIP side of the business, both in revenue and volume terms, were fairly positive. In revenue terms, it was up 56% year-on-year. Overall, management is still optimistic, and majority of its VIP customers were from China. Our analyst feels that the target price is the stock price is fairly valued at the moment, so our recommendation is neutral. Capital Land, one of our top picks in the Singapore market, actually performed fairly alright. Strong sales momentum in China is likely to continue for the next 2 years, and it will be reflected in the earnings for the company. The company will also be reviewing its non-core assets and will announce plans to improve the ROE over the next 3 to 6 months. Accumulate rating is maintained, target price raised to 405. Wilmar International, the earnings came in above PSR and consensus estimate. It were negatively impacted by lower CPO prices, but there were positives from revised CPO export duty in Indonesia. The China's soybean crushing margins also improved. Feedstock costs was also lower for consumer products business. We are recommending neutral with target price raised to 379. NOL reported a negative earnings surprise, largely due to lower than expected system-wide freight rates, which came in at around 3% year-on-year growth versus our expectations of around 8% increase. Even though we think that near term the stock will not do too well, we expect the stock to actually do all right in the near term, as NOL returned to profit in FY13 on improved cost structure, rational competitive environment, and as they book in gains on the disposal of NOL building. Management also guided for better performance in FY13, but we should highlight that this is of a very low base in FY11 and FY12, where they actually experienced substantial losses. We downgrade our recommendation to neutral, near-term weakness, but 1 year horizon is fairly valued. I'll hand over to Joshua, who will talk about our new initiation today on Baostit.
Thanks, Derek. Joshua here, Head of Research. Today, I initiated on Baostit Singapore, and the price as of Friday was $1.27. Today, I think it's moved up, about a cent, and the target price is $1.80. Okay, so that's the price chart of Baostit. As you can see, it's rallied a fair bit from 95 cents over the past 2 months. So the question is, do we think that there's still upside? So if you put your attention to the forecast panel, well, we think that if our forecasts come right this March, we should see an earnings growth of 2.5 cents more, which actually translates to a 9.4 times PE stock, which we think is pretty reasonable given the business models, which we will elaborate. And if also the forecasts are correct, then the yield would be 5.5%. Okay, so now let's get down to why we are optimistic on this company. Baostit has 4 core main businesses in infrastructure, and our tagline is that it's got a strong economic moat in the geospatial. So 1 economic moat and 2 market leaderships. Okay, geospatial technology, which drives 30% of earnings, is the one that has a strong economic moat. We'll elaborate more on that later. Industrial real estate solutions is split into 2 segments. Basically, you have design and build, and we have a growing industrial property portfolio. In the design and build, it has a clear market leadership, being only one of 3 companies which are full turnkey. Okay, Okay, full turnkey, I will explain what that means later. For the energy-related engineering business, which drives 10% of profit before tax, the key products are the direct-fired heat processes, that is at the heart of the refining process, and waste heat recovery units. In here also there is market leadership, being one of 4 players globally. Finally, the water and wastewater treatment plant is the one that does not contribute to earnings at all. Okay, so as you can see, looking at the earnings spread, if you still think of Bousted as a energy-related engineering company, then I think you're about 5 years behind, given that Geospatial far exceeds it about 3 times, and industrial real estate exceeds it about 6 times. Okay, and those 2 are the main things going forward. Okay, in the Geospatial division, it exclusively distributes and supports what they call a geographic information system. Okay, made by an American company called Esri, and Esri has given Bousted exclusive distribution rights and service support rights in Australia, Singapore, Malaysia, Indonesia, Brunei, Timor-Leste, and Bangladesh. Okay, so what is a geographic information system? Basically, it is a technologically enabled map. It's a mapping software such that objects on the map can be populated by a series of quantitative and qualitative data. Okay, that means geographic information about where the object is can be linked to information about the object. So, so if you have any object, right? Let's say it is a pipe network. Okay, you can populate all the pipes in there with the diameters, the lengths, what they're made of, when were they installed, okay, all that kind of data. Okay, so when you populate objects on a map with data, you can then start doing analysis, all right? You can see how the objects interact with each other and the geographical space in it, quantitatively and qualitatively, okay? And you can apply this GIS to any network of assets on a map, right? And there you can enhance the assets. You can do planning and analysis. You have better field mobility, operational awareness, and stakeholder engagement. So I'm going to give you an example of this, which is basically PUB. Okay, PUB operated 3 networks of piping, water provision, sewerage, and rainwater drainage across 3 respective departments. And they engaged Bousted to install a GIS. Okay, so what this GIS was to improve the asset management of these 3 networks by overlaying them with descriptive data. Right, from there they could improve the planning and analysis by viewing the assets from different perspectives, network against network. So, for example, water against drainage collection, right, and network against layers of roads, buildings, property. Okay, so from there, field mobility was improved as maintenance crews had mobile devices which could access the GIS and communicate with command centers in real time. This improved operational awareness as hotspots could be identified through analysis of the geographical and asset data, and stakeholder engagement was improved as all 3 departments were using a common platform and could therefore integrate their operating systems. Decisions became more objective, data-driven, and it broke down silos within the company. Okay, so this is an example of infrastructure, but actually anything that that can be depicted on a map, and if you have the data about it, you can use a GIS for that. So for one of the things is actually like disease control. Okay, so if you imagine that if you have outbreaks of diseases, right? What the Center for Disease Control can do is start populating the map with where the outbreaks are, when were they, and how far apart are they from each other. And from there, you can start plotting vectors, and you can start getting a handle on the situation. This was also used in disaster management. So, for example, the Queensland flooding, right? Data was entered into, where were the areas with the hardest hit of floods, and where all the piping was, where the main centers of problems were, and they could also get a handle on the situation quickly. It's also used in defense, crime fighting, and anything that can be data on a map would be able to use this GIS. Okay, so this GIS is manufactured by this company called Esri, and Esri basically dominates the entire global the global market basically. So its GIS is the gold standard of GISs. It has 41% global market share, and the number 2 is a distant 10% away. And in terms of governments, it's got a 61% global market share. Esri spends 20% of revenue on R&D, and was founded in 1969 and still is privately held. The founder, Jack Dangermond, is ranked 190 on Forbes, and the great thing about Esri is that it works with its overseas partners on exclusive country licenses. Okay, so like we said, Bousted has an exclusive license in Australia, Singapore, Malaysia, Indonesia, and 3 other Asian countries. Right, these subsidiaries which hold licenses are 88.2% owned, and the balance is owned by the founder of Esri himself. Revenue comes from the distribution of the number of users, consulting and implementation, training, and after-sales service. Basically, the more you use, the more you pay, which is why Australia is still a growth area. Now, Australia has implemented Esri's GIS as the backbone of its spatial data infrastructure since 2002, and that is still driving Bousted's geospatial division's growth after 10 years. Now, Singapore is also starting to implement it throughout its government agencies and stat boards, and it is actually being used for the master plan. In Malaysia and Indonesia, since breakthroughs were made in 2011, as both countries implemented geospatial data infrastructure projects. Okay, and these both of them, these geospatial data infrastructure projects are going to be used across ministries and agencies. So there's plenty of upside from Singapore, Malaysia, and Indonesia, and at present Australia is still driving growth. So you can imagine when these 3 other countries start gearing up its usage for the GIS, we'll see even more earnings coming in. Okay, the secular trend that this is plugged into is basically data-driven decision-making. Okay, and Singapore, Malaysia, and Indonesia have set foundations for heavy usage. It may take some time off. May take some time to take off, especially for Malaysia and Indonesia, as one of the important things about being able to use this mapping software is data. Okay, and these countries need to beef up their data collection. Australia, on the other hand, will continue to keep driving earnings, as will Singapore. Okay, so it's got the earnings profile from Geospatial is pretty steady, as you can see, from 2008 to 2012. You know, there's quite a steady rise in revenue with really healthy margins of in the more than 20% range. Okay, and profit before tax pretty much tracks that year-on-year growth. Okay, so which is why in our forecast we are using about a 12 to 13% growth on the top and bottom line with pretty resilient margins. Okay, management guides that growth for this division is visible for actually up to 2 decades due to Esri's economic moat. You have to remember that for Esri there's almost a total lack of competition in the global market. It's got total dominance on the market, and we're riding a secular trend of data-driven decision-making, and we have exclusive country licenses. Okay, let's move on to industrial design and build, and the industrial property portfolio, which drives 60% of earnings for Bousted. Okay, looking at the panel on the top and at the profit before tax margins, you notice that they are pretty decent. Okay, and that already signals to you that Bousted is not a normal contractor when it comes to designing and building. Okay, and also that its balance sheet is remarkably clean and it's working capital light and capex light. Okay, which is unusual for quote-unquote a contractor. Basically, in our view, it's not even really a contractor in the Singaporean sense of the word. It's a one-stop shop, full turnkey house. Okay, so basically, if a MNC comes to Bousted and says, I want to build an industrial property plant because I'm going to manufacture something or move something around, they can do the whole thing at Bousted. So Bousted will have architecture, industrial design, structural and civil engineering, and construction project management to TOP, the full value chain, end-to-end, a one-stop shop. And this explains why its margins are more decent. Now in the construction, there is no manufacturing and no fabrication done by Bousted. It's pure project management. So all that, the construction is outsourced basically, and Bousted basically is the project manager. Now, for this kind of end-to-end capability, only Ascendus and Bovis have similar capability. Okay, the demand for industrial design and build, we think, is more about the evolution of industrial property in a stable growth environment, and it's not so much about the addition of new space. Okay, clients tend to be technologically advanced MNCs, and as GDP slows and productivity overtakes mere additions of labor and capital, it's likely that industrial space will keep evolving. So Singapore's industrial history has gone from labor-intensive to technological capital-intensive to IT and internationalization to R&D and tech. Okay, and Bousted basically is well placed to ride Singapore's trudge up the value chain. Now, apart from just designing and building, there's also another method to this business model, which is basically design, build, and lease. So clients may want to go asset light, and which means that they don't want to actually own the property at the end of its construction, but are willing to pay the owner rent. So Bousted will design and build as per normal and not recognize any revenue or profit for it. However, when it comes to TOP and clients move in and pay rent, recurring income will be boosted. Okay, so basically Bousted takes the property onto its balance sheet and starts to charge rent. Okay, Bousted's rental income is going to already rise by about 30% as there are 2 DVNL contracts that will come TOP this year, and floor space will rise from 75,000 to 102,000 for its portfolio. Rental income will rise from about 13 to 18 million. Okay, so if you add both geospatial and these rentals, we wish to alert investors that Bousted's recurring income is going to rise from 42% of PBT to 53% of PBT in about 2 years, assuming everything else stays flat. Now moving on to its third business of energy-related engineering. The 2 main products are heat-fired process heaters. This is the actual unit that breaks down oil and natural gas into its various petroleum products by applying high heat to catalysts. Okay, so it's right at the heart of the refining process. Now, waste heat recovery is the unit that takes away the waste heat and flue gas and reapplies them back to the heating process. Now, there are only 4 players globally in this space. Bousted's one of them, the others Foster Wheeler, Kinetic, and Hertie. There are high barriers to entry, knowledge and track record, which is knowledge and track record. Now, you wouldn't expect there to be margin compression given that there are so few players globally, but there is because the main contractor is a competitive space, and the Koreans are basically winning at very low bids and are passing on lower contract win amounts to Bousted, which will then have to accept lower margins. So if you look at the top panel there, margins have actually compressed from the peak of about 16.3% in 2010 and have come down to about what we think will be 8.7 going forward. Okay, so although we think that order books will be okay, the fact that this margin compression does represent a risk for this business. However, we take comfort to the fact that there are only 1 of 4 players globally, so there is a lot of value proposition for this business still. Now we go on to the 4th business, which is water and wastewater treatment plants. I won't spend too much time on this one, except to say that it's an intensely competitive landscape, and we are not expecting any earnings contributions from it, but neither big losses either, most of which have already been realized in terms of provisions for legacy issues, etc. Okay, now another selling point of Bousted is that it's very efficient in its free cash generation. So about 86% of profit before tax converts into free cash, which means dividends and new investments for investors. So as you can see there, cash flow from operations hugs PBT quite closely. CAPEX is extremely light, and free cash flow to the firm is, it's pretty much in line with PBT. So this leaves opportunities to make new investments and to pay dividends. So in terms of new investments, they have mainly been about the industrial property portfolios, but they have also invested in 8% into one of the top 10 manganese mine developers in Australia, and they have I think about a 4% stake in a Beijing mixed development with Perennial. Okay, I think doing a SWOT for Bousted is quite useful, given that there are quite a few business units. Now, for strengths, market dominance, product leadership, product stickiness, and exclusive dealership for Geospatial. I think that kind of economic moat is really hard to come by. Okay, market leadership for industrial property design and build, given that they're only one of 3 full turnkey players in this region. And market leadership for its direct-fired heat processes and waste heat recovery. There are only 4 players globally, including Bousted. Now, recurring incomes are set to grow due to the industrial portfolio and Geospatial. And the last strength is the immense free cash generation, which allows for new value-accreting investments. Now, the weakness is that I think the water business has too much competition. Opportunities would be that geospatial technology is riding a secular trend of data-driven decision-making in the government and private sector. Industrial property design and build will ride Singapore's progressive march up the industrial value chain. Process heaters may actually find new demand in Australia and the US and industrializing Asia, as actually the refining plants are moving to these regions, which is where Bousted has been winning its contracts actually. Waste heat recovery may also find increased demand as the refining process has to be made more environmentally friendly. Now, for threats, I think on the design and build space, I mean, you never know. Okay, players could start merging to become full turnkey as well. Now, the heat processor business, I think, faces the most immediate threat, which is that it operates at the subcontractor level, and so it faces margin compression as the main contractors are bidding more aggressively for their projects. Now, we also have a risk that I wish to highlight for Bousted, which is that there is contingent liability of US close to 19 million for a guarantee that it gave to Bank of Commerce and Development through the Arab Banking Corp. Okay, this was subsequent to its 300 million township joint development project in Libya in 2007. But as we all know, there was a civil war in 2011, and the whole project had to be abandoned. Now, Bousted has already made full provision for losses on the project, but it does not want to make a provision for this contingent liability because it thinks it has a very good case why it should be released from this guarantee. Basically, it's claiming force majeure. Now, force majeure is basically, you're saying that I've done all my due diligence to make the project work. However, certain things were completely outside my control. In this case, it was a civil war. Okay, so I think I personally do agree with them, and I think common sense advises that force majeure will likely be upheld by the courts. However, one should never take these things for granted. In terms of order book forecasts, we're going to be very, very conservative. I think we're probably too conservative for the real estate design and build, and we're forecasting. We're forecasting order books which are which is slightly below the historical average, and we're doing the same for energy related and holding them flat as well for water. So the main gist is that for our forecast, we're going to use flat order book outlooks, which could be actually too conservative for the industrial property design and build. Now, in terms of core profit, now if you take that flat order books and the predictable growth of Geospatial plus the new property additions, okay, we actually come out with core profitability at in the 90 million mark, which is substantially higher than what it used to be anyway. Okay, and if you net off head office costs and other non-segmental gains and losses, non-core operating gains and losses, we come up with the reported PBT of in the 80 million mark, which is again substantially higher than what it used to be. So basically, what we're saying is that I mean, forecasts are always, we're not you're not trying to say that it's going to be that exact number, but you're giving a ballpark sense of where the company is going. And our sense is that we're going to hit a new era of profitability for Baostad. Now, if you look at this table here, revenue percentage total, profit before tax percentage total, the idea here is basically, I want to take you down to here, is that profitability is going to be increasingly driven by geospatial, right, rising from 30 over to 40%. And if we are using flat order books, then actually, yes, we do see energy-related and all the others decreasing in importance. I think the point that we really want to drive home is that even if we have a very conservative outlook on order books, geospatial in itself is going to be driving things very much so going forward. Now, recurring incomes, as we have been talking, will probably increase from 40% over to 50% over over the next 2 years. Okay, profit projections drive free cash estimates. So our PBT estimates are over here, and cash flow from operations are over here. And basically, we're projecting this kind of free cash flow to the firm. Basically, it's based on historical trends of Baostad's free cash efficiency. Okay, so if we look at the, if we do a DCF on this kind of free cash, we're using risk-free rate of 3%, required return on equity for 9, and an unrealistic beta of 1. The reason why I say unrealistic is because actually Baostad's beta is 0.74, but if we use that, valuation drives up tremendously to about $2. Now, I don't think the market can accept that yet, and so we're going to use a conservative 1. Basically, a beta below 1 means that the volatility of the stock is not very much. The volatility is less than the market. And if volatility is less, investors tend to be willing to pay more for that. Okay, so Baostad could re-rate on that reason of lower volatility. Now, terminal growth of 0% is terribly unrealistic because obviously geospatial is not going to grow at 0% for the next 2 decades. Okay, but we're using zeros. So actually, we think that our valuation is based on very conservative forecasts, very conservative inputs. Okay, flat order books, no geospatial growth after 2015. So we think risks are to the upside for the target price. So is it cheap now? Like we said before, yes, we think that it's cheap, trading at 9.4 times this year's earnings and 5.5% dividend yield. So we have a buy on the stock, and which represents an upside of 47%. Based on the target price of 180. Okay, thanks. We can go on to questions.
Hi everyone, this is Ken. There's a question on Genting. The question is, can you share a little on Genting? Do you think the increase in VIP volume for fourth quarter is sustainable? On this increase, just to share a bit of the background, this quarter, Genting's VIP volume was actually at almost at a record high, and it rebounded very, very strongly at around 50+% year on year. In terms of sustainability moving forward, we are actually forecasting that quarter on quarter it's likely to be lower. We think that the recent quarter's sharp increase may be quite exceptional. However, moving forward, we expect that for the year ahead in FY 2013, that the average VIP volume would be higher than what we have seen in FY 2012. Calendar year 2012. But having said that, it's unlikely to be building up on current level. Yep.
Hi everyone, this is Derek here speaking. I'll answer a few questions on Sam Marine and SI Engineering. Sam Marine, the question is Sam Marine currently overpriced? No, we don't have a recommendation on Sam Marine at the moment. Our offshore marine analyst is still working on covering the stock. But I went for the results briefing. So overall, let me just say that expectations of the stock and its profitability was high. So going forward, there are a few key overhang that could weigh down on the stock price. Profitability is likely to remain weak as they begin to work on the new drill ships that they won from Brazil's Petrobras orders. That's the first drill ship that they are working on. Subsequently, as they progress on, if let's say they are able to get the right kind of margins, we could see profitability increase for the subsequent vessels that are under construction. But this is a very long gyration period, stretching out till 2018 or 19 period for the Petrobras orders. SI Engineering, there's a question on, given SI Engineering's recent results, what's your take on SIEC? If you look at our going to poems, you actually can see our results update on the company. The stock price corrected quite a bit recently, but we still continue to rate the stock as a buy with a target price of 610. Let's just say, why did it actually correct so much? It's not because of the results, but largely due to a very strong rally that probably resulted in a bit of profit taking. But fundamentally, I think the stock is the company is doing very well. We expect the joint ventures, in particular the Rolls-Royce joint ventures, say so, to do very well in the next few years because of a very strong number of trend engines that are coming on stream. You could take a look at the results update dated 6th of February, where we wrote quite a bit on the reasons why you should be looking at the company. Overall, we continue to rate the stock as a buy, 610 target price. I'll hand over to Waywen.
Okay, hi. Let me first take the question from Robert. So his question is, STI is trading sideways for a while, and the political events ahead. Alright. So as he correctly pointed out, the STI has been consolidating the range. As of today, at this juncture, it has been crawling along its 10-day moving average, like what we guided in our morning commentary. In terms of the political events ahead, the Italian elections, at this juncture, we are still waiting for the exit polls, right? The risk is that the former PM Berlusconi gains a major governing majority in parliament, or if a coalition is formed, if the former PM could exercise some power over the future developments of Italy, then it's a cause of concern because Italian reform commitments will actually be cast in doubt, and you could actually see Italian sovereign yields actually surging to unsustainable levels of 7% thereabout, like we saw last year, and that could cause markets to be jittery. In terms of the second political event, which is the US sequestration, alright, so the sequestration, briefly explained, is in terms of automatic spending cards. So the thing is that if right now, if Congress, which is currently in the political gridlock right now, if it does not manage to reach a compromise, you could see US $85 billion worth of spending cuts across the board on come 1st March, right? And that would again be a negative for equity markets, right? So with that answer, I hope I answered Chi Chuan's question. And then moving on to Daryl's question, what's your view on the Italy election result? Would there be any rattling in the market? I think we answered that question earlier on. So the key thing is that once exit polls comes out from the Italian elections, there could be a short bout of jitteriness, volatility in markets as they digest the results. And once again, if the former PM Berlusconi gains a significant governing majority, or if he could exercise power through a ruling coalition formed, then it will be negative for markets. With that in mind, I hope I answered the questions.
Hi, this is Ken once again. I would like to answer two questions. One a follow-up on the previous Genting question and the other on SGX. Okay, the follow-up on the Genting question is that it seems the person's asking if it seems that like Genting's VIP volume was driven on a credit expansion, which led to higher AR growth. AR being accounts receivable growth. And what's my take on it? My take on it is that the VIP volume was actually not driven by credit expansion, but rather it led to a credit expansion, meaning that it's because there is a higher demand for credit, and therefore Genting has lent out more money on credit. Reason being that Genting remains pretty conservative as to whom they lend out their credit to, because otherwise, should they lend out credit too aggressively, it will lead to high amount of bad debts, which is not favorable for the company. So my take on it, once again, is that the higher VIP volume has actually led to the credit expansion, and that is not the other way around. Yep. And the second question, second part would be on SGX. What we think of SGX and whether is it good to accumulate now or wait for it to drop a bit more. In terms of the dropping a bit more, that would depend on how you view the ETA charts. However, that said, our view on SGX at current price is would be accumulate, because if you look at the recent trading daily average trading value, it's actually sustained high for the last 2 months, being January and February, and it's been much stronger as compared to what we have seen last year. Last year, you were looking at probably the daily average value traded was around 1.2 billion. Right now, we're looking at easily 1.6 billion daily average, and that's exceptionally strong, and this will actually translate to higher revenue for SGX, which we would see in the first quarter results. And given that we expect this higher, stronger daily average trading value to continue, we think that this is positive for SGX, and it would continue to, share price would continue to improve in reflecting of this stronger trading value? Thank you.
Hi, Joshua here. We have a question on Bousted. So basically, this person wants to know more about the actual usage of GIS. Okay, so I'll try and explain that again. So GIS is basically data, essentially, how would I say it? Geographic information system is data-driven mapping. Okay, so basically you have a map and you have objects on the map. Okay, and you can populate all these objects with data. So they can be quantitative data, they can be descriptive qualitative data. Okay, so I'll use the example of PUB again. So PUB runs 3 networks of pipes. Okay, delivery of drinking water, collection of rainwater, and wastewater and sewerage. Okay, so all these pipes can then be populated with quantitative data, how big they are, when their diameters, how long they are. Okay, and they also can be populated with qualitative data. When were they installed? What are they made of? Okay, things like that. So when you have all this data, you can start doing analysis. Okay, so you can start knowing where your weak points are, where the choke points are, what needs improvement, and how you can optimize the assets that you have. Okay, so I hope I've answered that question. Thanks. Any more questions? Okay, so thank you very much, and we'll hope that you'll tune in next week as well. Thanks.